Welcome to Veranda CA. We're revising our Chapter 5 of EIS. Welcome to the quick revision session. Now we're going to quickly see the CASA process. What is CASA? Current and savings account. Current and savings account. Under that, we have a very simple process. All of us would have opened a savings account with the bank. Yeah. So what is the process? One is connect to the relationship manager or log in to the website of the bank, and through that click an option. Connect with the relationship manager or the branch manager you have at number 1. Go meet her for opening an account. Yeah. So connect with the manager, relationship manager, or connect through the internet. Second, submit your KYC documents. Okay, they will give you an application form. You have to sign at basic places, and along with that form, you have to submit your KYC documents. It could include your Aadhaar, identity and address proof. Next, based on this KYC documents, the credit team will verify the financial and credit worthiness of the person, of the applicant. Financial and credit worthiness of the applicant. Then I am given an account. I am given an account. It could be a current account or savings account. Using that account, I can access various facilities of the bank, which includes deposit of check, withdrawal of money, transfer of money, RTGS, NEFT, all of that. Clear? So CASA process, very simple, basic. Credit card, issuance of facility. Issuance of the facility is same as CASA. Relationship manager, KYC, and then credit team verifies the financial and credit worthiness of the applicant, and the credit card is physically delivered to the customer. Authorization of credit card. So first is issuance of credit card. Second is authorization of credit card. So once I swipe it on a terminal, say I am going to a petrol bunk, and petrol bunk I swipe my card. Okay, it will ask me for PIN. Once I enter the PIN, it will validate, or what the machine will do is it will send a request to the merchant bank, to the acquiring bank. Now this acquiring bank will connect to the credit card issuing bank. So this is a merchant bank, also called as acquiring bank. It will connect to the credit card network. This network will connect to the credit card issuing bank. Once the credit card issuing bank says that okay, it tells the network you can go ahead, the PIN entered is right, and then the amount comes to the merchant bank. So the merchant bank is nothing but the petrol bunk bank, and this is credit card issuing bank, my bank. My card is submitted here, so my bank. Petrol bunk bank asks the credit card network. The network reaches out to the credit card issuing bank, and the process is again reciprocated. Clear? Third one is credit card clearing and settlement process. Clearing and settlement process. So here is when the funds are debited, but how does the clearing at the end of the month happen? Transaction data is transferred by the merchant to the merchant bank, by the petrol bunk. The transaction data is transferred to the petrol bunk's bank. Clears after deducting merchant fee. Okay, so there's a merchant fee which is deducted, and the amount is the rest of the amount is put in the bank, usually a 2% fee. Okay, merchant bank provides list of settlement transactions to credit card company. To the credit card company, it could be my company, it could be my friend's company who's filled petrol, it could be my neighbor's company, to all those companies. Now this credit card company to issuing bank, it gives the money after deducting something known as interchange transaction fees, because from my HDFC bank it is going to the petrol bunk's SBI bank. So HDFC to SBI, they have to transfer the money. What they do is they deduct something known as interchange transaction fee. Interchange transaction fee. Clear? And when the SBI bank wants to deposit that money in the petrol bunk's account, they charge something known as a merchant fee. Merchant fee, very simple. Clear, guys? Yes. Let's move on to the next in line, which is mortgages. Mortgages means keeping something and taking a loan against that. For example, house. I tell the bank, listen bank, I have a house. Please don't worry, this is the collateral. I live here, but you can use this as a collateral, and based on my house, you give me a loan. Okay? Truck. So I say I have a fleet of trucks. Based on these trucks, you can give me a loan. Okay, so mortgage is keeping something against which you can get a loan. Against which you can get a loan. So types of mortgages: home loan, top-up loan, loan for under construction property. So what is the meaning of a home loan? Home loan is where to construct your house, you take a loan. You take a loan to construct your house. Top-up loan, to get the furniture in your house, to do a renovation in the house, you take a top-up loan or an additional loan for the renovation or buying of furniture. Loan for under construction property. This property is still in construction and you want to take the loan. Clear? Types of loan: fixed rate and floating rate. Fixed rate and floating rate. Under a fixed rate, already the bank and the customer, they decide the rate of interest, and that is applicable throughout the tenure of the mortgage loan. Floating rate depends on the economy. Yeah, if the economy is performing well and if the interest rates are high, then it is a higher rate. If it is low, then it is a lower rate. Clear? The process of mortgage. Customer, now this is a little important, mortgage process, because there are many internal teams that are involved. Because you can understand, if there's a house that I'm giving to the bank as a collateral and I'm staying there, then the bank needs to be sure that this house is valued at that amount of which I'm giving a loan to the person. Is the house really belonging to her? She's taking a loan against the house, but does the house really belong to her? So these additional steps are there, because of which additional internal work needs to be done by the bank. So customer approaches the bank, fills a loan application and gives the KYC documents. Know your client. Yeah, KYC, know your customer. Sends to the credit team, sending the documents to the credit team. Now this underwriting team verifies the financial and employment information. So I say that I am on a salary basis and every month I am assured of this much of salary, of which a little component would be my interest cost. So I can comfortably pay my interest. Dear bank, don't worry, I will comfortably pay my interest to you. Okay, so verifying the financial and employment information. Legal team. So the underwriting team then passes it on to the legal team. They do a title search, whether does that house really belong to me. Valuation team determines what is the value of the house, and based on the value of the house, they will give a loan. Okay, say if the house is for 3 crores, can they sanction a loan to me for 30 crores? No. Okay, they can sanction only a loan amount which is equal or lesser than the value of the house. Operations team generate offer letter. So after the valuation team has determined the value and the legal team has established the title, the operations team will generate an offer letter. In that offer letter has to be notarized by the loan officer. Signed off, and cashier order is provided. Now this cashier order is provided in exchange of the original title deed of the house. So now the house belongs to the bank. Okay. In case I fail to repay my loan, they can take the house. Mortgage process. Next, we have treasury. What is treasury? They deal in products. So, I can also invest in the bank's treasury products. Okay, what are the treasury products? One could be the government category, one could be the trading category. Under the government category, I have government security, government shares, commercial paper, certificate of deposit, mutual fund, venture capital funds, debenture, okay, all of these under the government category. Under the trading category, I have forex, derivatives, okay, over-the-counter exchanges, traded futures, option swaps. All these instruments I can invest in via my bank. Treasury process. So treasury has 3 departments, okay. Earlier we saw what was treasury and what are the 2 types of products that they deal in. One is the government thing and other is other commodities. Here we are seeing the three levels or 3 segments in a treasury, which is front office, middle office and back office. Front office directly deals with the clients. They do some sales and trading research and all of that. Middle office interacts with the front office and back office. Now this consists of the risk management team, the compliance team. They check the work, controls, procedures, finances and help in implementing the strategies. Then we have the back office. They are in charge of the IT operations. They are in charge of straight through processing, exception processing, yeah, reconciliations. So now this front office, back office transactions, front office, back office reconciliations, they are in charge of all of these transactions at the back office. Clear? Loan process. So we finish CASA, we finish credit card, we finish treasury, we're moving on to loan process. Okay. Products, it could be fund based and non-fund based. Under fund based means there is actual outflow of money from the bank account, actual outflow of money. It could be your cash credit, overdraft account, bill discounting, where the bank actually has to send some money into my account. Non-fund based, letter of credit, bank guarantee, which means that funds are not given immediately, but in the event of a contingent event at a future date, it could have to give out the money. So for this, it charges a commission. For giving these non-fund based, it charges a commission. Clear? And here it is interest for fund based. Here it is charging an interest, here it is charging some commission amount. Clear? Letter of credit and bank guarantee. So under the loan process, number one, create a customer master. Create a customer master. So you'll follow the same steps. Relationship manager, then you submit your KYC document, it goes to the credit team for verifying your financial and credit worthiness. Then you give the sanction letter and PDC, you get your pre-disbursement certificate. Pre-disbursement certificate from the disbursement team. Pre-disbursement certificate. In that pre-disbursement certificate, all the details will be given. What is the limit of your sanction? What are the other details? Clear? Loan dispersal and income accounting. Customer approaches the, so once you get that sanction letter, you can go back home. When you require the loan, after say maybe after 2 months you require it in your business, that time you go to the bank with the sanction letter. Okay, at this stage you will be given the sanction letter. This sanction letter you can take it to the bank. Now they will verify that with the CBS system for checking what are the limits up to which they can give the loan. Now fund based, funds are credited, principal and interest is accrued on a daily basis. Receivables are booked in an asset account, loan receivable account. Non-fund based, okay, please note over here, non-fund based means letter of credit or bank guarantee. Contingent entries posted for assets and liabilities. Commission is charged upfront. Contingent entries posted, contingent, which means in the event of the failure of payment, then we will have to pay the money, right? So in that contingent entries are posted for assets and liabilities as the case may be. Clear? So in the next part, we are going to see the risks and controls with relation to various parameters. Number one, it is application control. Risks and controls with relation to application controls. Okay, so application, the core banking software is an application. Under that, what are the risks that you may have? Interest, wrong interest computation, or the rates are entered correctly into the system. Okay, so wrong interest computation, what should the control be? That the computation of interest should be done automatically by the CBS, so that if it's a computer done interest calculation, it will not go wrong. Rates entered incorrectly, fed into the system while account opening and can be changed only on approvals. How are the rates incorrect? Because someone has modified it. So make sure you have that control that it is fed at the system of giving the loan by an authorized person, and later it can be modified only on additional approvals. Duplicate customer records. Okay, duplicate customer records, you need to system validate to find out what are the duplicates and delete them. How duplicate customer records? In that case, what will happen? A few transactions will come here, a few transactions will come here. I can never balance or match the account. Lien. Multiple lien on single asset. Multiple lien on, so with that house, I've got a loan from bank A, bank B, bank C, right? System to prevent lien exceeding the deposit value. Clear. NRE and NRO account. Non-compliance, yeah, these are for non-resident accounts. Non-compliance, undue benefits to customers. Sometimes you get an interest rate which is higher, or there is some non-compliance by the account holders. In that case, the control is close the NRE account and open a savings account for them if they have moved back to the country. Fake accounts are there in the system. okay, and the rates are entered incorrectly, system validation. Wrong charges leads to a loss to bank, system validations. Okay. File upload, wrong file saved to wrong files to save a NPA. Okay. Okay, in order you don't want to classify an account as a non-performing asset, you will upload a wrong file. Duplicate asset records, for which you need to have a unique ID. Okay, so these are control and application with reference to application controls. Risks and controls with reference to CASA, credit card or loan process. CASA, credit card or loan process, all the three have the same risks or controls. So, you can mark a smiley here because all the three have the same risks and control: CASA, credit card and loan process. Okay, very easy. Credit line setup or the credit limit, how much amount you can give to the person, credit limit. It is not in line with the bank's policy. Credit limit is not in line with the bank's policy. For that, you have to check the policy and check various ratios, various financial ratios, all that you have to check in order to find out what is the credit limit that you can set up. Credit limit not in line with the bank's policy and approved by unauthorized person. So first, it's not in line with the bank's policy, but it is done by the approved person. Second, it is not in line with the bank's policy and done by an unauthorized person. In that case, you need to ensure what are the access rights given to all the employees. Credit line can be breached. In that case, transaction should be denied by the system. Okay, so which means there is a credit of 1 crore, I go and change it in the system, can be breached. I give a loan of 1 crore 10 lakhs. Credit limit was only 1 crore, but I give a loan of 1 crore 10 lakhs. So that transaction should not be processed by the CBS. That is the control you need to set. Clear? Yes. Next, customer master. Not the same as the pre-disbursement certificate. Okay, not the same as pre-disbursement certificate. So, for example, the bank person is my relative, is my neighbor, close aunt. Okay, so in my PDC, okay, my rate of interest is mentioned as 5%. Okay, in my PDC, my rate of interest is mentioned as 5%. Or on the loan that I have to pay. So, it could be say 12%. Okay. But what she has done is she has tried to favor me and she has put it as 11.25%. So, I have to pay less to the bank. Okay. I have to pay less to the bank. Customer master is different. In that case, the controls can be check the access rights. Okay. All this needs to be done only by approval and not generally. Interest is inaccurately calculated. For that, automated through the CBS. Access, unauthorized. So, for that, access duties again, segregation of duties. Accounting, in accounting, the entries are not accurate. So, automate the entries, the balancing of ledgers can take place. So, risks and controls with reference to CASA or credit card or loan process. The first one is credit line setup or credit limit. 3 points here. So, there are 3 different points. Okay. Not in line with the bank's policy, not in line with the bank's policy and approved by an unauthorized person, can be breached. 3 points here. Customer master, not the same as pre-disbursement certificate. The master is edited. Access rights. Interest is inaccurate. Access to the system is unauthorized. Access is unauthorized. And finally, accounting entries are unauthorized or inaccurate. Clear? Done with risks and controls. Yeah, there are a few more risks and controls with relation to your mortgage and treasury. Please have a glance at that. Basel III. Now, what is Basel III? They are the norms or the reform measures to oversee the regulations, supervision and risk management that happens in a bank. This is a global guideline on how banks should maintain their capital adequacy ratio. What is the amount of loan that the banks can give? It should not be that the banks give money in excess of their capacity. Then later they will not have enough cash in hand to operate. So, determine the capital adequacy ratio based on risk assessment. Data from CBS is transferred to data warehouse. Data warehouse stores data in multi-dimensional cubes. Earlier, data was stored in a traditional warehouse, but now data is stored in multi-dimensional cubes. Hence, traditional MIS will not provide answers. There is a need for comprehensive and accurate solution using artificial neural network logic. So, because of multi-dimensional cubes, we need to have highly complex analyzing software. They are known as artificial neural network logic. Artificial neural network logic. Clear? Very good. Let's move on to the next thing. Data warehouse in CBS. Data warehouse in CBS. Data is taken to the warehouse. It's stored in multi-dimensional cubes, not in rows and columns like traditional DBMS. Artificial intelligence applies algorithms based on artificial neural network logic. It helps in finding out hidden trends and finding out risk assessment. Next important topic. Money laundering. Money laundering. What is money laundering? It is the process to conceal. Conceal means hide. Process to conceal proceeds and ownership. Proceeds and ownership received from scheduled crimes or other activities. Scheduled crimes such as rape or murder or other activities. Sale of drugs, pornography, all those scheduled crimes or other activities such as taking bribe. Okay. Proceeds and ownership so that proceeds appear to be legitimate. So that the proceeds appear to be legitimate means clean. Okay. Now, what is money laundering? It is the activity of making dirty money or black money appear to be very clean. Dirty money to be appearing as very clean. That is the meaning of money laundering. We've heard of so many cases in the past with regards to money laundering. Yeah, suddenly overnight you see a man has one fancy car, a fancy penthouse bungalow. Yeah, overnight you see the small office has been transformed into a big office. Yeah, he's taking foreign trips. So, suddenly where did that money come from? Okay, so in that case, it is from an illegal source. It is from an illegal source. In that case, it is known as money laundering. The objective of a money laundering is to conceal the existence of dirty money, illegal source, money obtained from illegal source, and it is put onto illegal application. Stages of money laundering, important question. Stages of money laundering is money will multiply. Placement, layering, integration. Placement, layering and integration. Okay. So, stages of money laundering. Placement, taking the money from a place of crime to a more secure place. For example, I am the dean of an university. Yeah, many people, they have lined up outside my college to take admission in my college. So what I do is I accept as donation, I expect large amount of money from each of the candidates. Now this large amount of money I have stacked it up in my college. Okay, so maybe for 10 days, 15 days I can stack it up. But later, will it be safe in my cabin? No. Okay, I need to put it in an other place. I need to take it to an other place where it is less suspicious. Okay, so placement means I somehow enter the money into the financial route. I somehow route it into banks. That I do with the help of layering transactions. Okay, we will see what each one of this is. Placement, movement from scene of crime to a place less suspicious and more convenient. Okay, if it's in the bank, it's more convenient for me because then it's going to look like clean money. More convenient to the criminal. Layering, separation of proceeds from the illegal source. Separating the proceeds from the illegal source. So, I will put it somehow in a way that no one will understand it is from the bribe that I've got for admitting students into my university. No one will be able to relate it to that. Using complex transactions, using difficult transactions. Why should I use complex transactions? Because if I'm using, say, the entire money, 15 crores I've got. The entire 15 crores if I take it in the bank, everyone will get to know that it is from some illegal activity. So I have to carry out some complex transaction. I have to give some amount to my father's, brother's, sister's, daughter's account and then get it, okay? And then I have to invest it in some other company. I have to put it in another country where the laws are very loose. Using complex transaction to hide the audit trail. If I take small parts of money and put it in various sources, no one will be able to trace it back to my donations or bribe that I've taken. To hide the audit trail and to hide the proceeds. To hide the audit trail, to hide the proceeds. Where? Where should I put this money? Okay, I can put it in shell corporations or fake companies. I can put it in offshore banks, bank accounts with Mauritius, Switzerland. I can put it in offshore banks, Bahamas, in countries with loose regulation or secrecy laws. Secrecy laws means they have laws such that they cannot reveal their account holder details to anyone. So in that case, I know that I'm safe. I can put it there directly. So layering. Separation of proceeds from the illegal source using complex transactions to obscure the audit trail, to hide the audit trail. After I do that, I get assets from the money. What I can do in layering, I can issue fake invoices, get money against these invoices. I can launch an IPO, get money for that. Okay, layering, how? Using complex transactions, difficult to trace. Many bank transfers, and it means many bank transfers. Through many bank accounts I transfer that money, and it also changes the currency, so it is very hard to trace it back to my original bribe. Clear? Stages in money laundering, friends, 3. MultiPLI, PLI, placement, layering, integration. Placement, layering and integration. Yes? Very good. Done. Under integration, conversion of illegal proceeds to legal business earnings. It looks like it is in some legal investment or it is out of a legal source. Normal financial or commercial instruments, fake invoices, loan against foreign deposits, Okay, purchase of high value assets. I buy a house, boat, diamonds or some huge painting, Mona Lisa in my house I put. Okay, some original artwork I invest so much of money in that. Okay, purchase of high value assets, integration. Okay, so now when such things are happening, now my money looks very clean. No one knows by seeing my diamond ring that it is from the source of bribe. Okay, so now here the money is clean. So money laundering, dirty money, launder it, make it look clean. Clear? Placement, layering, integration, placement, layering, integration. Terrorist financing, money starts out clean like charitable donation. Various reports to be generated by CBS to be submitted to the regulatory authorities. I need to have various reports, and why terrorist financing is different from money laundering is because in money laundering, the first source is my bribe, which is my illegal activity. But in a terrorist financing, the source is a clean source. It's like a charitable donation, and from there it goes for terrorist financing. Now for every bank needs to, because it's dealing in so much of money, high volume of transactions, it needs to have some anti-money laundering policies in place or controls in place. Why should it have that? Because in case someone has used that bank to launder the money, it will result in negative publicity, damage to reputation of the bank, loss of goodwill, fines for the bank. So for that, to avoid all of these consequences, the banks need to have special fraud and risk management software. Special fraud and risk management software. Clear? It's not going to be done by the usual software. It needs to be a very highly specialized coded software. Prevention of Money Laundering Act 2002. We have a few legal provisions that we're going to study. Okay, Chapter 3 talks about the definition. Chapter 3 talks about the definition, Section 3, not Chapter 3, Section 3. Chapter 4 Obligations of banking companies. Under that we have section 12 and section 13. Section 12 says reporting entity to maintain records. What are the records that needs to be maintained by reporting entity? Now this obligations of banking companies or other financial institutions or intermediaries. Okay, say for example, I am buying jewelry or I am buying foreign exchange. Nowadays they ask for the PAN card number, they ask for my Aadhaar, they ask for some additional validations. So obligations of all these parties. Reporting entity to maintain, what are the records they need to maintain? Power of the directors to impose fine. Now this director is the ED, enforcement director of this money laundering department, enforcement director to impose fine. Chapter 4 and it talks about section 12, section 13. Chapter number 10 is a miscellaneous chapter which has section 63, punishment for false information or failure to give information. So you give wrong information or you don't even give information. In both the case, section 63 will be applicable. Section 70, offences by companies. Clear? Offences by companies. So these are the 4 sections that we are going to see. Starting with section number 12. Reporting entity to maintain records. Okay, so I need to maintain records of all the transaction in such a way that I am able to reconstruct individual transactions. Even after 3 years, if you ask me, please, this is an amount which is a credit, please trace it back. Where is it coming from? Okay, I need to be able to trace the source of this credit. So maintain record of all the transaction in such a way that I am able to reconstruct individual transactions. Now this needs to be maintained for 5 years from the date of transaction. From the date of transaction, for a period of 5 years, the bank has to maintain the records of the transactions. Furnish information to the director. Furnish whatever he is asking, furnish it to the ED, enforcement director. Maintain records of business correspondence and documents evidencing identity of all its clients, which means your KYC documents. Maintain record of even correspondence and even KYC documents, KYC plus. So it could be some letter of credit, some letter asking the bank for something, business correspondence of the clients. For 5 years from end of relationship, not from the date of transaction, from the end of relationship between the client and the bank. Clear? Now this information that is by the bank is SPDI, sensitive personal data or information. So that needs to be kept confidential. That needs to be kept confidential by the bank under subsection 2. Clear? Moving on to section 13. Section 13 deals with the powers of directors to impose fine. Powers of directors to impose fine. Now, the directors can make any inquiry. They can knock your door, knock knock, and they can ask you that I have a doubt on this amount in this account, please explain. Okay, they can make an inquiry based on what? Based on their research. Okay, now if they find the transaction to be complex in nature, what it can do is it can instruct an auditor to get the accounts audited. It can instruct an auditor to get the accounts audited. This auditor is a chartered accountant suggested by the central government, appointed by the central government. Okay. In case of failure to comply with this act, the director may, so in case in section 13 they say that if the director is asking you for some question, okay, but you say that no, I'm sorry, who are you to ask me any question? I am not going to give you any information. I can just tell you that this is from a proper source or a legit source. What the director can do is issue a warning in writing. So point number 1, give a warning. You better do it, otherwise the consequences are going to be not favorable. Direct to comply with the provisions. Okay, direct, issue a warning, direct them or ask them to comply with the provisions. Direct to send reports, ask them to send reports. impose a monetary penalty. Okay, so this monetary penalty can be not less than 10,000 going up to 1 lakh for each such failure, for each failure. So if there are two things that I have done, then there are 2 times he can apply these penalties, not less than 10,000 and not going up to 1 lakh rupees. Clear? Impose a monetary penalty. Third one, send copy of the order to any bank who is a party to the proceeding. So this order that I will have, that I will also send to the other party who is involved, which means that now I am dealing with, say I am dealing with XYZ bank. Okay, and I ask a question on the transactions in the book of Live Well Charitable Organization, who has an account with XYZ bank. Okay, so now I will send an order to Live Well and the bank both. Clear? Send a copy of the order to any bank who is a party to the proceeding, any other bank also. So I will also, so Live Well Charitable Organization also has an other bank account with ABC bank. So this order copy will go to ABC bank and XYZ bank. Clear? Very good. Now we finished section 13, we are moving to section 63. Punishment for false information or failure to give information. Punishment for false information or failure to give information. Now, anyone willfully or maliciously is giving me wrong information, false information, then liable for 2 years of imprisonment or a fine which can be up to 50,000 rupees or both. It could be 2 years in jail, 50,000 or both. Okay. 500 to 10,000, a fine which is less than 500 but going up to 10,000 fine for each failure if any person. So here it is established that the information is wrong. In the subsection 2 they are saying if they do not answer any question, they are not giving information. Refuse to sign a statement, refuse to answer a question, refuse to sign a statement, refuse to attend a hearing, attend a summon or to produce books and documents. Okay, in that case this is the fine which is applicable, 500 to 10,000. Yes, boys and girls, is that clear? Third, I need to give them an opportunity of being heard. I need to give them an opportunity of being heard. So we're talking about section 63, punishment for false information. So false information is covered in first subsection. The other one talks about punishment to for failure to give information, not even given information. If the information given and it's false, then 2 years 50,000. If information is not even given, then it is 500 to 10,000 for each failure, Now, if they do not appear in the hearing or summon, then they are also liable under the IPC, Indian Penal Code. Clear? Next we have section 70, offences by companies, Okay. Okay, now say we have an employee here, Mr. Chotu. Okay. Now this employee is being hired by a company, ABC Limited. Okay, and there is some fraud that has been happening with the transactions that are being dealt with Mr. Chotu. Okay, in this case, both ABC Bank and Mr. Chotu will be questioned. If ABC Limited Bank is able to prove that they hired Chotu with the right intentions, they were clear that Chotu was a good person and they did not have any reason to believe that he would commit this fraud, then they are spared. But otherwise, what happens is both the company and the employee, if they are not able to establish that the employee is independent of the company, then which means that they have not put in the right controls. So they will also be liable. Alright. Second is any director or officer of the company will be held liable in case they have not put in proper controls. Clear? So section 70. So we saw section 12, section 13, section 63 and section 70. Clear, guys? Yeah. Banking Regulation Act. Now we're moving on to the Banking Regulation Act 1949. RBI has the power to control licensing. It has so many powers, okay? Give a technology platform for NEFT, RTGS and so many other powers. Because of the Banking Regulation Act, RBI has been granted all these powers. Functions of RBI. This is an important question. MRI. Functions of RBI. Monetary authority, regulatory authority and issuing authority. Monetary authority, regulatory authority and issuing authority. Monetary authority means what? It takes care of the monetary policy of the economy. It is in charge of maintaining the credit flow in the economy. Open market operations, CLR, SLR, CLR, CRR. Cash reserve ratio, SLR, statutory liquidity ratio, all these come under the monetary authority of the RBI functions. Next is regulatory authority. RBI is in charge of regulating the operations in order to ensure that the public is confident about the banking system and the depositor's interest is taken care of. Depositors should not be harassed by the banks. Issuing authority, they are in charge of issuing currency. Issue, exchange, destroy currency. Issue, exchange or destroy currency. Functions of RBI, monetary, regulatory, issuing. Monetary, regulatory, issuing. Yeah. With that, we come to an end of chapter number 5. Thank you very much.